Welcome, everybody, to the Chinchilla Pickin' Podcast. It is September the 15th, 2024, the Ides of September. It is 4:14 p.m. As always, we hope to be entertaining, educational, and uplifting because we want everyone to make money. My name is David Underwood, and I'm joined by the one and only the Baron of Bonds himself, Brandon Beaver. Brandon, how are you?
I'm okay.
What's going on, Brandon?
It's just the Cowboys.
Cowboys.
Yeah.
That I mean
Well, we
that
don't have
that
to talk about it. Let's move on. It was worst defensive game Dallas Cowboys I've ever seen in my life. Ever.
and you've been a Cowboys fan a long time too, so I
Yeah.
understand. I
33
understand.
years of my 38 years on this planet.
38 years young. Look at you, man. Look at you.
Look at me.
Well, I will say that there was one quick headline that came out today, but before we get into our stock and investment news, and it was about the more gunshots going off near presidential candidate or ex-president. I don't know what you call him, or just President Trump. Is that what you could use now? I don't know.
Uh,
But anyways, they went off. So I immediately pull up my charts after I saw everything was okay, nothing more elevated after that. Pull up my watch list and I look at Bitcoin because it's the one that trades over the weekend. And last time this happened, Bitcoin shot up. So I was looking for a similar type of situation, and it was very erratic chart, Brandon. It didn't do the straight shot up like it did last time. It shot up for like a second, went back down, shot back up, went back down, and there's these big gaps, very big gaps, almost like a heartbeat type of a chart there. Very interesting. Very interesting.
yeah.
So yeah. All
Well,
right.
the big news is that Dallas lost.
That's not the big news. There's so much other big news going on in the world today. We could take our path lots of different ways with interest rates coming. Are you buying, selling bonds? I read like 3 articles on that. I was going to take that approach. I got the Baron of Bonds himself
Yeah, we
here,
could
so he's
talk
going to
about
ask
that.
that. I
Okay.
mean, you could go that. You could go the Fed rate cut. Are they actually going to do like the 250 basis points that they're expecting over the next 12 months and start with 25 this time? There's a lot of angles to go, but we're not covering any of that.
I would expect that Jerome Powell would make an announcement. He's not like the Fed chairman and women that have been before him. He's not, he's not somebody that you have to guess what his next action is going to be. He's very clear with what he's, going to do. I mean, he lays it out for everybody. And it actually weirdly, it took the market like a year or two to adjust to that. Because we're so used to having to guess by the size of a briefcase what the, rate, if there's going to be a rate cut or it's but he's a different kind of cat on the Federal Reserve for sure. He's different. He tells you what he's going to do. So I expect if there's going to be a series of rate cuts, we'll hear about that soon.
Gotcha. But so much to get into. We picked and choose what we felt was best for our listeners here, and what we feel we can do the most difference on. So let's get into it. Rules, rules, rules. Brandon and I get together 5 to 10 minutes before the show, and we tell each other what we're going to talk about. We actually save the discussion just for you, our listeners. So you can hear the bicker, the banter, the back and forth right here for you. Brandon, take us away.
All right, Berkshire Hathaway Class A shares recently just had their longest losing streak since June 23rd, 2009.
I think you talk about this more than I talk about oil, but go
Yeah,
ahead.
maybe. Shares fallen 6.2% over an 8-day stretch. Class B shares had a 4-day losing streak. So, um, not as bad for Class B shares, but one day in the current losing streak, we saw a small loss of only about $6.60 a share on the Class A shares. So, I mean, when you look at the $689,280 closing price on that day, it's minimal. And we did have a long winning streak going into the recent losses. We were probably overextended. Berkshire Stock rallied to a $1 trillion market capitalization. Um, Pretty sharp run up there. So overextended. Then we got news that Vice Chairman Ajit Jain sold $139 million in stock earlier this week. That spooked investors more. Jain still owns 166 Class A shares with additional Class B holdings. He sold 200 Class A shares at an average price of $695,417 on Monday. I don't care about that. I don't know why he sold the shares. There could be 1,000 different reasons as to why he sold. All I know right now is Berkshire Hathaway is down to a price earnings ratio of 14. They've got record amounts of cash on hand. I think it's a buy. I'm a little bit concerned as to the reasons why they sold Apple and Bank of America now. The Apple sales by one Berkshire executive said that it was tax implications. And there was kind of a theme in the article that I was reading that it might be about the upcoming election. So maybe they think that the proposed policy of taxing unrealized gains is going to happen.
And
Maybe.
that's that. I mean, that could be definitely be a side effect of it. I've heard rumor mills on numerous platforms and articles of people hinting at that. I know the everyday investor is not too concerned since they're saying that it's going to be for only companies of people over 100 million. But if everybody who has over 100 million sells off 30% of their holdings in order to pay the taxes, that's gonna make the market just tank.
Yep.
That will make the
Not
whole
good.
market tank.
Now, it won't be good for your 401ks, won't be good for your individual stocks, but we're not a political show, so we can move on from this. But yeah, I think Berkshire Hathaway is a good buy. Another reason why Berkshire has stunk in the past week is that Occidental Petroleum shares have also kind of stunk. And, famously, Berkshire has been buying those up left and right. So, I mean, that could be another reason. And my question to you, oil guy, Occidental, you think it's a buy or do you know?
No, I'm not. I'm holding my position in Exxon. I'm not selling it. I have it's moved. My position's right at the line where it's at right now. It's moved up to profitable, then back down to not profitable. It's not dropped enough for me to add to my current position in oil, which is Exxon.
Okay.
And there's been a lot of issues in the Gulf. The Gulf of Mexico has lost 1/5 of its operating due to the storms recently over the last month. And then natural gas has also taken a hit due to the storms of recently over the last month. So there's been that's taken a huge bite out of the oil companies here in North America.
Okay. Okay. So you don't, but Occidental in particular, because the valuations look pretty low.
Yeah, Occidental in particular, I am not. They're more of a natural gas, but if unless we can ship it over to Europe faster, quicker, or more sustainable, that would be a way that Occidental could dramatically increase their profitability since the cost of natural gas in Europe is 10 times or more than what it is in the United States because we have plentiful of it and they have very limited of it.
They got a shortage.
Yeah, so I mean, if Occidental can find a way to get that natural gas over there other than tankers, or and get a couple pipelines, then maybe then Occidental would be a huge company to own,
Okay. All right.
and maybe that's Buffett's long term vision.
Yeah, it could be. That would be good. Right.
Yeah,
And yeah. All right. I'm going to move on to my next thing here. I told you that would be fast. I think Berkshire is a buy. Um, I'll get into this a little bit more into the show, but man, I've done some extensive research over the past 2 weeks. I'm just not finding many buys in the market right now. We're just seem to be pretty overvalued. But U.S. utilities equity research analyst Data Center Dynamics has done a recent study. And what they actually kind of got into a little bit outside of their peer review, what they usually do, and they were studying the expenditures, and so was Goldman Sachs. Goldman Sachs was a part of this too, of big tech companies on generative AI, and they're saying that there is limited results right now. So, and maybe even limited results in the future. Goldman Sachs was saying that the $1 trillion that's being spent on data centers, semiconductors, grid upgrades, and other AI related expenditures just does not seem to make too much sense at this moment. There are people out there that are smarter than I am, Dave. I don't, I know that's surprising. But if you're looking at Elon Musk, or you're looking at Amazon, you're looking at Mark Zuckerberg, obviously they think different. But $1 trillion on data centers, semiconductors, grid upgrades. Um, Goldman Sachs made the point. This was Jim Cavello. He made the point here that what problem are we solving? Are we solving a problem of labor? Because what we're doing and what we're seeming to do, and Dave, I'll get to you in a second here, is replace low wage jobs with very expensive technology. Go ahead, Dave.
It's very expensive right now, but doesn't mean it's going to stay very expensive. And NVIDIA has already made tens of billions of dollars each quarter off of data centers. So NVIDIA is actually doing well with data centers. It all depends on the type of data
Yeah,
center
but
you have. Go
NVIDIA is
ahead.
only doing well on data center because they're selling the chips to the companies. They're not the end user here. They're
You,
not.
you,
Yeah, they're not. So I mean, the question is does Microsoft, Amazon, and even smaller companies, Nucor Steel, for example, or U.S. Steel, or whoever, do those become more profitable because of the technologies that are produced by artificial intelligence and the investments being made right now?
so artificial intelligence is a software play, right? You're looking for upgrades in software. Can we develop software that can solve and replace, like you said, jobs, or replace make things faster, quicker, easier to get, to find, to solve?
Yeah,
That's what we're looking for with AI. If you're looking for like to actually replace workers, such as, like, I'm just going to use the Chipotle example. They have that machine that makes avocado. They have a machine that cooks the chips. If you're looking for more machines to go ahead and run the whole show there at Chipotle, well then you want to invest in robotic companies. Boston Scientific, Tesla, those are robotic companies. That's how you would invest for the future. So AI is more of a software. It's not a robotic company. It's just software and software alone. Now, there are companies that are using AI in combination with the robotics, such as so this leads into two
intuitive
topics.
surgical
Yeah.
would be.
So this leads into the topic that I was going to get into, but two of them. So let me take it. Let's take it this way first. And because I was going to get into Google and do a quick overview of Google and where they're at and what they have going on. Google uses a lot of AI, and Google's trying to continue to use more AI. But Google actually has real time uses for AI, such as Waymo,
Yeah.
right? We all know Waymo. Waymo's the autonomous driving vehicle. Um, they have them for trucks, they have them for cars, they have them for everything. They are everywhere right now. Not entirely everywhere, because Alphabet owned. Go ahead.
No, you're good.
All right. Waymo and Uber are expanding their partnership and beginning offering driverless car rides in Austin and Atlanta starting this year. Currently, the only one that was in Austin was Tesla, but now you're going to have Waymo as well, and Waymo's going to Atlanta. So now they're going across the country in more cities, right? In early 2025, the company plans to dispatch a fleet of Waymo's fully autonomous all-electric Jaguar I-Pace vehicles that will grow to hundreds over the time. This is what they're planning to do in these cities. Today, Waymo's already powered fully autonomous trips for tens of thousands of riders in Phoenix, in San Francisco, in LA. They are going to more cities, and the growth here is going to be tremendous for them. The one who had all the trouble, that was GM and their Cruise robotaxi. That was the one that was famously, a woman was struck and dragged 20 feet by a Cruise robotaxi. They also had the cone issue where the Cruise taxis were being stopped by homeless people just grabbing a cone or something and put it in front of the Cruise taxis, and the Cruise taxis did not know what to do. So Whammo was not the one having all those issues. Whammo is doing excellent. So if you're looking for something with some future potential, um, Google is actually using Combinate has robotics, has technology, actually has real time use, and using AI to make those things work faster, better, quicker.
Okay. I like that. I'm a owner of Google stock, so or Alphabet, whatever you want to call it. Twitter, X, Alphabet, Google, who cares?
So I
Um,
mean that's a real case use of that can do well. Now some other places that where I'm not seeing real use is more Meta. What is Meta doing with AI? What is Meta's, how they using this? I know they're using it. I don't see it though. I don't see a product. I don't see a vision from
I don't
Meta.
see money making opportunity here other than maybe in reality labs with the what are the
VR.
Oculus with the Oculus VR. Um Obviously they've got Llama on Facebook right now, which by the way has been giving me alarmingly incorrect results that I've been asking. I've been asking really hard questions to answer on purpose because I wanted to see if it would tell me it didn't know. Unfortunately, it doesn't know, and it still gives me the wrong answers. I was asking questions just to test it, not serious questions um, about my hometown, asking about people who grew up there and everything. Um, Meta's Llama incorrectly told me that Neil Armstrong went to school in Ross, Ohio. It told me that Neil Armstrong, the first man to go on the moon, went to the same school that I did. Um, and that sounds like it doesn't matter. But then if people are asking questions about politics or things that, do matter in their life or health or anything like that, instead of saying it doesn't know, if it can't find the right answer, it gives you the wrong answer. And I don't like that.
Yeah,
That's
so Meta is a perfect example of AI really not producing anything and not really. I don't see the revenue stream for Meta as of yet. Like you said, maybe in the VR aspect that might be more applicable and drive some sales there, but I don't see it
yeah.
anywhere else.
Yeah, and I've been a critic of the idea. I've thought that our fear of misinformation was overblown, but that's a real problem if it doesn't get that right. And I criticized the tech to itself very heavily, but
Right.
okay,
So I want to bring this back here. Hold on, because I know we're talking about AI, and
yeah.
we still have another whole
What's
uh
it say for us?
area I want to get into with AI, but Google I think is a buy right now. It's down right now. The stock is down. I don't need to talk anymore about the Whammo introduction here, but it's down at 158 a share. At one point earlier this year, I mean, it was. Let me see if I can pull up the right chart here. It was almost at 200, 198 a share. So it's taken a step down. Why? And it's because of antitrust issues. They
Yeah,
believe that they have too many antitrust cases coming in from too many sources that they believe this is going to force Google to break apart.
Google. No, may I don't know. Possibly. Shareholders could profit from that too if it happens. Well,
That's my point, and that's why I'm saying that 158 Google is a buy.
yeah, I think it's one of the best ones to buy out of the Magnificent Seven right now. All of them right now are cheaper than they were 2 weeks ago.
Right? And well, Google has a PE of 22 right now.
Yeah,
That's probably I haven't checked, but I'm willing to bet that's probably the lowest of the Mag 7.
it probably is. I don't know.
I'm just saying
I
it looks
have
good.
I've got Google and Meta in there. I'm so far up on both of them. I haven't even really paid much of attention to them.
I mean,
Other
you
than
don't need to. I mean, they
no,
do well. Google pays a dividend. It's a small dividend. It's
yeah,
not much. It's 0.5%, but they do pay something.
I know when they report earnings, and I listen to their earnings, and I update myself then. And then other than that, I just kind of leave them alone.
Right?
Yeah,
I think it's undervalued right now where it's at, and it's a buy, and it's because they're actually using the technology to grow. They're actually using the technology to move forward and make money off of it.
yeah, and they're utilizing the Pixel phones and such to the Android software to maximize the artificial intelligence capabilities as well,
Yep, exactly.
without supposedly using personal data of the users. Supposedly.
And a lot of people forget Google owns YouTube, so they have all this real-time data coming in from all the users of YouTube.
Okay. So I'm going to get into the second part of the study here, but it kind of goes along with how I do my research, right? Because I kind of want to see where I think that opportunities are going to come in the next 5 to 10 years. The second part of the study was what where data center dynamics comes in. They study the grid infrastructure of the United States. And what they were saying, the impact of the data centers here in the US and going electric on the vehicles and things like that. We had the rolling blackouts in California a year or two ago. Um, Recently in India, they warned their residents of potential power outages and prolonged power outages due to air conditioner use. Um, Warnings about the impact of colder weather on the U.S. power grid. Uh, in 2021, nearly 250 people died in Texas during a winter storm due to power grid failure. And they're saying that we need grid infrastructure solutions, right? So governments and private companies are investing in solutions to try to strengthen grid systems, such as battery installations in Texas, a $2.2 billion investment by the U.S. Department of Energy to expand and protect our power grid. Um, a representative from Data Center Dynamics said, after stagnating over the last decade, we expect U.S. electricity demand to rise about 2.4% CAGR, compound annual growth rate, from 2022, this is 2 years ago, but all the way to 2030. So data centers are going to account, they said, for about 1% of that growth. So where are we looking at right now that could possibly be an investment into infrastructure solutions? And I think everything that I saw so far, it looks like this is priced in. It might be overvalued. General Electric Vernova, GE Vernova, wildly overvalued right now, in my opinion. They're undergoing a turnaround, so the price to earnings may look a little bit better. They haven't been profitable for a full year since the spinoff yet, but we may get there. So I think that belongs on your watch list. Nextra Energy Inc. is another one that I think belongs on your watch list, and Constellation Energy Corporation. These are three big electric providers and servicers throughout the United States, and I was really looking for national companies. Nextra is largely based in Florida, but they do across the US and Canada as well. So that's what I was looking at. I didn't really want to go into Duke Energy because they're not going to update their grid. I mean, they may subcontract to update their grids, but I really want to look at the people who are going to service the grids, the outside companies that are going to come in and fix the problem. So I've got a watch list that's growing right now. I haven't bought anything.
I like that. I mean, you're making a play on them, but without actually buying into the electric producing companies. You're doing it through the servicing companies.
Yeah,
Same
higher
reason why
return on
people buy
equity,
Schlumberger or a rig.
higher net profit margins for them too. So
Yeah.
that's what I would do. That's how I'm building my watch list on this. Like I said, I haven't bought anything. I think all of this is priced in right now. We get more fears about a recession. Everything goes down. Might take these things with them too, and give us a better valuation for the future.
I, here you go. If we get a recession,
I said more fears. I said if we have more fears of a recession, which we're bound to, depends
yeah,
on how
we're,
deep
we're
this.
always going to have the people on TV and the talking heads talking about recession. We're
Exactly.
always going to have that. It doesn't matter what's going on. The recession talk is always going to be out there.
And that can give us opportunities.
It could if
Yes.
enough people see data that points that way. I mean, more people. Jamie Dimon came out recently. I think it was 2 days ago, and talked about stagflation. He mentioned in an actual interview that he said he's concerned about stagflation in the United States. So I mean,
Well,
there is other talk out there. I know, right? Brandon's taking a deep breath right now. He's getting ready to
because it
pull out
doesn't
his
because it doesn't
history book
exist
from
yet.
late
I mean,
70s to early 80s. Here we go.
so yeah, and I'm concerned about it too, but I'm concerned about it happening. We're not seeing it right now. So the thing is, even if you're in my position, you think there's more of a possibility that we're going to have a harder recession than what we've seen. Then there's not. It doesn't matter if you have a company that comes into a good valuation range, you buy it and you hold it,
Yeah.
and then you buy more if you get a better opportunity on it, right?
Yep.
Yeah, like Delta 2 weeks ago, Dave, up 9%.
No way. I
Yes.
didn't even follow up on that. Let me see that chart. Hold on. Let me see this chart because there's no way. I thought they had more downside to go. I really did. Let me see. Delta Airlines DAL. Yeah, I mean that they're up. Yeah, they are up. That's a
9%.
nice move.
That's
That's a
about,
nice
yeah,
looking chart. Yeah, look at that.
yeah.
I get the ones wrong more often of where I'm missing out on gains, and I'm okay with that.
Yeah, because who cares at that point?
I
It's
I wasn't
opportunity
sold
cost.
on it at the beginning, so I'm okay with my justifications.
It's an opportunity cost. That's what it is. But at the same time, it's a very large stock market with a lot of stocks in it. There's opportunities all the time.
And you're not going to get them all, so don't beat yourself up if you miss one or two. It's fine. It's
Yeah.
completely fine. Doesn't matter.
The next
So,
sector that I was looking at for growth over the next 5 to 10 years. Go ahead.
can we pause? Because I want to continue on AI discussion here because I have more to talk about with
Okay.
AI.
Okay.
I mean, I don't want to drop AI just yet. I want to talk about this article I pulled up from Reuters. Came out yesterday at 7:24 a.m. and the headline reads: "Exclusive: OpenAI's stunning $150 billion valuation hinges on upending corporate structure." Sources say. So I'm going to read a little bit from this article here. The details of the conditions of the $6.5 billion funding, which have not been previously reported, show how far OpenAI, the most valuable AI startup in the world, has come from a research-based nonprofit and structural changes it's willing to make to attract ever more investment to its fund in pursuing AI. So what they're asking is these new investors are saying you gotta allow us to not cap our profit on our investments. All investments previously, when they did a round of funding, they capped the investments because OpenAI is a nonprofit. And now people are saying to get rid of the nonprofit. Let's just go profitable. Let's make this valuation go up, and let's see what we can do with this. Now, this is tricky, right? Because OpenAI has always maintained, we're here to help the world get AI, research, develop it, deploy it in a way that balances commerciality with safety and stability, rather than focusing on pure profit maximization. That has been what they have said from all the time in the past to now. However, they are now they're switching gears, if you will, and they're being more open to being profitable, to growth, to all this money coming in, because the investors want, hey, no cap on our return. This is creating an issue. And number one, there's two issues with this. Now OpenAI is no longer this what's the word I want to look for? Ideologic, if you will,
Ideology.
company. Yeah, ideology company that it has this vision. It's just trying to help the world. Now they're a profitable company. This is the valuation problem that we're starting to have in AI. And some people may say, well, it's not a problem because we're achieving our goals. Yeah, maybe. Um, let's talk more about OpenAI in this particular example I'm using, right? So OpenAI has commercialized its efforts by selling subscription-based services like Chat GPT to consumers and enterprises, which now boasts over 200 million users, right? Sounds great. OpenAI so basically what they did is they capped returns from investors at 100 times the investment. They expect this multiple to be lower for future rounds, is what the company said in 2019. So when Microsoft invested, they're going to be capped at 100 times their investment of what they put in, which is not bad. I would take that
Yeah.
any day of the week, right?
Right.
OpenAI used this model of capping investments to raise more than $10 billion in recent years, with the majority coming from Microsoft. It was last valued at $80 billion in February. So we are already doubling, almost doubling the value of the company in less than a year, which is concerning to me because these other AI companies, like I talked about on TikTok and I talked about on the show Glean, those ones are ones that probably will not last. And so what's going to happen is companies like Glean are getting these raising these valuations. They're taking out loans based on those valuations, and they're not going to be able to repay them. And now we're going to have defaults. That's
Yeah.
what I'm concerned about in 2 to 5 years. Now, is OpenAI going to be one of those that defaults? Most likely not. It's the leader. It's the one in lead in the front here, but there's no guarantee of it, which is why investments are always risky. I'm not a fan of the growth in the valuations at all. Not particularly a fan of OpenAI moving away from nonprofit to profitable.
Okay.
But it is what it is. Brandon, thoughts, real quick.
You know what? I so want to be for them becoming profitable. But I have to wait and see because they're going to have to dramatically change their business model. That's number one. Number two, the chat GPT thing has done something that technology hasn't done in quite a long time since the beginning of the internet. We're seeing a lot of these tech companies come together and work together for the future of innovation, which I think is amazing. So I hate to use this word, but chat GPT right now is sort of a common, you know, it's part of the commons in tech right now. It's kind of like Wikipedia is to encyclopedias, right?
Yeah,
So I don't know if I want to see it to move away from there. I'd have to see what the results are.
can't see the results, so it moves away.
You can't, and that's what I mean. So far, the results for innovation have been good. I mean, I've been kind of more bearish on artificial intelligence and the latest AI boom than most people, but we seem to be getting somewhere with it. I don't know where yet. Nobody knows where, which is why I argue against the high valuations. But
Well, right now, Nvidia is the only one really making profits off of it.
well, yeah, that's because everybody has to buy from them in order to achieve whatever they're trying to achieve here.
But that's the thing. There's no real guidance. Like I said, unless you're a company like Boston Scientific, Tesla, or Apple. I mean, not Apple. Google. You don't have any real world use currently for this AI. How it's going to be deployed.
And that's what I'm concerned about is the real world use. Is it going to be like the internet was, which is, I mean, we went through a big .com bubble, but obviously it changed the world, or is it going to be kind of like the internet of things where like some people use it, some people don't? We all thought that was going to be the next big thing, and it turns out it was kind of just meh.
Right. Yeah. I mean, I don't know, man. I don't know. What I look at though is it. I'm worried about valuations. I'm worried about investments in these. I constantly see ads on every social media. When I get on social media to make posts or to check on family and friends, I see ads for all kinds of investment in AI. Use AI for this, and it's all fake. And it's just
Yeah,
there's so much of the scammers out there. There's so much of is this really AI or am I just talking to a computer program and not actual AI program?
yeah,
Because there's
that's
a
picking
difference.
up. That's
We
picking up
had
a lot.
Yeah, we had computer programs chatting with you before. So, I mean, what's different about this AI versus what we had before? That's what I want to know. Like, how is this different? Nothing's changed in 10 years. So, show
Yeah.
me something different, and that's where I'm at. I'm like,
Do you
and until
remember?
you show me, I think these valuations are overblown.
Do you remember Ask Jeeves?
I do. I do
Boy, that
remember
was
Ask
that was
Jeeves.
ahead of its time, wasn't it?
Yeah, I mean, Ask
Where's
Jeeves
that
is
rubber?
doing it. Ask Jeeves did back then what over half of these programs are doing now that claim they
Yeah,
have AI.
yeah. Well, it did, but maybe not as well as like Chat GPT, but it did. Somebody should buy that back up and bring it back. I'm feeling nostalgic.
Are you gonna open the Ash Jeeves company?
Yeah.
But yeah, so my concerns are there with AI. That's where my concerns is valuation of companies or who's gonna end up losing money on this. I don't think Microsoft is gonna lose money on it. They're mainly invested with OpenAI and not much else. But Nvidia has been investing in a lot of companies, and I see why. Because Nvidia needs these companies to produce a product so they can justify building
Yeah.
more chips.
Yeah.
So yeah,
Yeah.
if they're making 20 billion, they're gonna go ahead and turn around and invest like 5-10 billion in all these companies, grow those companies, and they get an ownership of part of those companies so that if they are successful, they can buy chips for themselves.
Yeah. I'm not a fan of investing on hopes and dreams alone. You got to show me proof of where you're going. And a lot of this space, there's just no proof yet.
Exactly. Yep. 100% agree. All right, I am done with AI, so you are free to take back over.
Yeah, I do think the healthcare system, I do think healthcare technology will benefit from it. I do think that defense will profit off of it. I think they'll benefit.
Oh,
Uh,
defense 100% will with drone
man,
technology,
finally.
missiles. Yep.
But we always say that the market pays for patience. Finally, Lockheed Martin is going somewhere. The stock for Lockheed Martin is finally going somewhere. But anyways, healthcare. Speaking of that, that's another industry I kind of want to look at for the next 5 to 10 years. Bureau of Labor Statistics is predicting, I think it was for the next 5 years, 1.9 million jobs to open annually in healthcare. Um, and the industry positions, which include ambulatory services, home health services, outpatient care centers, physicians' offices, dental offices, hospitals, nursing homes, and such. All of that together is expected to grow by 14.77% by 2027. That's 28.77 billion dollars. So another area that I want to keep on my watch list. I still didn't find anything to buy yet.
There are so many different sectors within sectors of the healthcare.
There
So
is, there is.
where are you looking at? We're looking at like pharmaceutical. We're looking at hospitals. We're looking at home health aid. Are we looking at the companies that make Intuitive Surgical that make the machines?
I do like
Like where are
Intuitive
we going?
Surgical as a company. I need to look at the stock. I don't know about the stock. I
GE
looked at
makes
that.
some of the CT scanners. So
GE
or
Healthcare.
MRI, MRI.
GE Healthcare is overvalued right now. It's on my watch list still. I bought it, I sold it, made a good profit on it. I think I doubled my money or something. Maybe it was like 30% actually. Was it? I think it was 30% on GE Healthcare.
I knew you were on here bragging about it every week for
GE
like a month.
Vernova, I over doubled my money and I kind of got those two mixed up, but I've sold both of them by now. But GE Healthcare, I think, is overvalued. It's on my watch list to buy again if it comes back down within valuation range. Um, I mean, I just I like health insurance companies for this right now.
Man, all right. So where would you go with that? Because you got Anthem, you got Cigna, you got Athena. Yeah, you have Kaiser, which owns hospitals and doctors
Yes.
and has unions, and that's a whole different aspect too. Kaiser Permanente. So I mean, where are you going to go with your investments here, man?
I don't know yet. I don't know.
And
I
Pfizer just had
gotta read
another
through the-
article about a new cancer drug that is showing tremendous progress
Oh
in
man,
phase two.
I don't want to do that again. Pfizer's doing good with cancer research. Eli Lilly and Novo Nordisk, they're probably going to maintain a 67% market share of the weight loss drugs, right?
Yep.
Both overvalued in my opinion. That's priced in. And and
Whoa, no, Eli
no, I do
Lilly's
think
not
that
overvalued. Eli Lilly has so much more to offer than just the weight loss. Novo Nordisk
they do.
is mainly driven by the weight loss, but they have a bigger share of the market.
They do, but I think the stock has all of this stuff priced into both of those two. Those have been outperformers in the
Well,
industry.
I don't disagree with you. That's why I sold my Novo Nordisk. I
Yeah,
took my profit.
yeah. So I don't know. I don't know if I want to go back into pharmaceuticals. And by the way, with the weight loss industry, we still don't know. what the side effects are going to be over the long term. I mean, it
We
seems
do
good.
on these. They've been in the market for 10 years for diabetes.
Yeah, but they're being used for other things, for just for weight loss, right? I don't know. There's too many unknowns for me
You can
personally,
read the
and
clinical studies. I think you're not doing your research. There is knowns. There is knowns. It is safe.
and then there's generics, and it just makes me nervous, and that's why I don't get into the sector.
The generics, so the generics and the ones that are selling their semaglutide on Instagram and Facebook, do not buy those. Those have already had negative side effects for individuals. Those are not working. Some people are getting ripped off. Those are fake ads. Do not fall for. I wish this is just a PSA for listeners. Do not fall for those fake ads. Actually, go to your doctor and see if there's
Yeah.
generics you can get from your doctor.
You people, what are they buying, like Mexican ephedra or something?
Pretty much. Pretty
That's wild.
much. Yes.
That's wild. Okay. So no, I'm just looking into the healthcare sector into general. I do like Kaiser Permanente. Those people are incredibly smart. I've read books that were published by Kaiser in the past
Yes.
about
I mean,
healthcare.
I used to have my insurance through Kaiser Permanente. I was in that network. It was a great network to be in. Everything was there. Everything was covered. You didn't have to go to a separate third party for this, a separate third party for that. Everything was all in one network. It was nice. So I do remember those times, and they
Um,
were ahead of their times in treating other things other than physical ailments as well. Kaiser was.
yeah, do they have a stock? I can't find them right
I
now.
do not believe so.
Okay, well, they're privately owned, so why are we talking about them?
I don't know. It's just
I don't know
another
either.
example. It was
United
another
Health.
example of a different area you could go into healthcare.
Let me tell you, United Health has been outperforming. I expect that to continue, and I would like to see a valuation come down on that so that I can buy into United Health. United Health would be a good one.
Gotcha. All right. Cool. What
That's
else you got, sir?
that's
That's it.
everything for me. That's
That's
all.
everything from Brandon. All right.
Yes.
So I was gonna go into I'm gonna do it, Brandon. I'm gonna do it.
Just do it, Dave.
This article came out on 9/13, 11:27 a.m. and it talks about the hikes on the tariffs that are going to in effect on September 27th. So that's in 12 days. What's going to happen is many tariffs, including 100% duty on Chinese electric vehicles, 50% on solar cells, 25% on steel, aluminum, EV batteries, and key minerals, are set to take effect on September 27th, according to U.S. Trade Representative. The USTR determination included a 50% duty on Chinese semiconductors. Polysilicon used in solar panels and silicon wafers are set to begin next year. The USTR kept a 25% tariff on lithium ion batteries and minerals and components. That's and others that will take effect at the start of 2026. China has proposed to retaliate against the bullion, quote unquote, tariff hikes and argued that its EV industry success is due to innovation and not support from its government. I'm sorry, I can't even say that without laughing. And not support from his government. The USTR also hiked tariffs on medical face masks and surgical gloves, up to 50% from 25%. And that's a way to push back on people switching from Chinese suppliers to non-Chinese suppliers. And the tariff on Chinese syringes will double to 100%. All of these are having a negative effect on certain companies such as Alibaba, PDD Holdings, and JD.com. All were down on Friday due to the news of more Chinese tariffs. Brandon, thoughts?
Can we lift the moratorium on cussing on the show?
Go right ahead, man. If you have to, go ahead.
Yeah, let me take a second. The stupidity all around from both sides, China and the United States, is just mind-boggling. Our supply chain has been broken since 2018, prior to COVID. Shortages everywhere. And we're going to continue to pass more tariffs? Let me add this. Hoover's tariffs prior to the Great Depression were and are very much looked at by leading economists as being a reason as to why we had the Great Depression and why it was so prolonged. One of the things that was brought up in one of the economics books I read on this long ago was a shortage of syringes and surgical equipment for healthcare, and we're
Right?
doing it again. They say history doesn't repeat itself, but it's been almost 100 years since those tariffs were passed, and we're finding ourselves right back in the same situation as we did right before the Great Depression. We've got enough shortages to deal with in this country. If the products from China aren't up to standard, people will not buy them, and the people who do will be punished by the market. Okay, steel, the US steel industry may be helped by this because they'll be able to raise prices. Guess who won't be? Everybody that uses steel products. Every industry that uses steel is going to suffer from steel tariffs.
Yeah, buildings, construction, all kinds of things across the board.
Mm-hmm.
Car companies. I don't even know if they use steel in cars anymore.
These politicians just keep making things worse.
So yes, yeah, everybody's making mistakes on both sides, I believe. But China is 100% definitely subsidizing the building of electric vehicles. The fact that they would have the gall to come out and say that they're not is ridiculous. The whole world knows you are. That is the only reason why you're able to make a $10,000 electric car
Yeah, you
is
know what?
because you
That
are.
sucks. That sucks for Tesla and it sucks for Ford, but it's great for the consumer, which is most people in the United States.
Exactly.
And this is what
Exactly.
happens when wealthy donors get into politicians' ears. The wealthy donors will benefit, everybody else suffers.
Yep. 100%. But these are going to go in effect. They've already been passed. They're taking effect September 27th. And it's just we're going to see what happens in the markets after that. So we'll see if that does it hurts our economy going forward or not.
Immediately, there might be a small benefit, but over the long term, of course, it's going to hurt.
Yep. So we will see. I just wanted to report that, let everybody know. Investments off of this, I'm not buying or selling anything just solely based off this news alone. Maybe I would look at Tesla, but it's higher than I would like it right now at 230 a share. I would like Tesla for it to be under 200 a share before I would buy it. Um, and then the U.S. Steel has its own issues right now with that merger that's being blocked by the current administration. We talked about this last week, Cleveland Cliffs and U.S. Steel and what's going on with that, whether or not they're going to allow the Japanese firm to buy U.S. Steel. There's other issues in the U.S. Steel market. I'm a complete bear on U.S. Steel and Cleveland Cliffs just because they were having too many political and now geopolitical issues.
I'm going to throw Nucor on my watch list and just do some research about it once we jump off here. I haven't really researched it. I just know that they've got a good compounded annual growth rate. Know a couple of other things about them that makes me want to put that on my watch list. They're a good company, so maybe them.
Yep. All right. I want to get into one last question I received via DM, and I want to apologize. I received this over this yesterday, and I have not had time to fully research. So I actually hadn't had time to research at all. And it was, what are my thoughts on waste management? Um, what I do know is waste management and Stericycle are in the process of merging and becoming one. They currently have bond notes out there for both of them. They're trying to find a way to merge the bond notes. So there's some financial issues there to work out. I believe overall at the other end of this merger, waste management might look good depending on its price at that time. It's a steady company. I wouldn't look for really anything big news wise that's going to make it take big gaps up or gaps down. It's just a steady growth company. Again, I don't want to give any guidance one way or another because I don't know enough off the top of my head about it. Brandon, anything you know about waste management?
No, I see them every day. Parked outside the office building that I work at.
Okay.
They bring a waste management truck. They've got a shredder that's in the back for paper.
Yeah.
Yeah, so I see him. But no, I thought, didn't we talk about this on the show like about a month or two ago?
Not Waste Management. It was talking about the merger that was
Yeah.
possibly going to happen between them and Stericycle, and they are working through it. They moved past. It should be 100% go on the merger. Um, and the Waste Management stock has dropped because they are the buyer, if you will, and usually the buyer always the stock goes down, and we'll see what happens. I don't know that. See, my problem is I don't know the numbers of Stericycle and the numbers of Waste Management off the top of my head, and I would have to look at both of them and then see what a combined company would be worth to give a buy or sell rating on that, and that's where my problem is. So for the listener, the one who posed the question, um, that's where I would do my research this week. Maybe you do your research, and then Brandon and I, one of us, will do our research and see if you could come to the same conclusion we do, or if you
I
completely
know.
disagree with us and say that we don't know what we're talking about. Let us know.
Wow, Stericycle by itself is valuation on that's pretty high. I I I only do acquisitions if it's cash only. So, and there's always going to be an exception to that rule somewhere, but it'll be very few and very far between. So,
There you go. Brandon, final thought. Take us home.
yeah, healthcare. I would definitely be looking at healthcare industry, keeping a watch list for that, keeping a watch list on companies that service utilities and electricity. Um, I think that those are going to be the best growing industries over the next 5 to 10 years. I hate to get political, but you know what? I always look at the politics and I say the Democrats get some right, the Republicans get some right, but when they agree, it's worse. It's the most terrible things that they agree on, whether it's, a new war or new taxes or what they agree. When they come together, that's when things get bad.
Gotcha. Gotcha.
Yeah.
My final thoughts is I believe Apple, Google, Alphabet, whatever you want to, Alphabet, not Apple, Alphabet, Google is a buy at 158 where it's at currently. I always say the price here on the show. That way, if you're listening to this a month from now and it's moved up, I said the price at 158 was a buy. Um, One that I think I was thinking forever was overvalued was Altria Mo, ticker symbol Mo. They do a lot of cigarettes, tobacco, alcohol, all your vices you could think of. That's what they do. They recently raised their dividend again,
Okay.
so now a bigger percentage. So now they, because $50 a share was the ceiling of the range that they always traded in. They traded between 40 and 50. They have broken through that range, and they are now at $53 a share. And I believe it's because of the hike in the dividend payment.
It's probably also because of the upcoming election cycle, and we're going to need plenty of their products to get through the next 4 months.
There you go. There's that as well. So that's one I'm looking at. I'm not saying it's a buy. I say it's a buy if it dips below 50. You could look at definitely buying it just because the dividend alone is a 10% return a year below 50. So that's a nice dividend payment. So you're going to make good money no matter what on Mo. All right. Cool. All right.
Cool.
Thank you for listening. As always, hit that subscribe button, follow us, tell your friends and family all about us. Take a listen every week to one of our episodes, all of our episodes, or just this one that you're listening to right now. We appreciate it. Thank you so much. Continue to DM us. As always, we hope you've been entertaining, educational, and uplifting because we want everyone to make money. Have a good night.
Have a good night.